Yo, boys and girls, how's it going? It's Market Scraper. Let's take a look at Metromile stock, Lemonade stock, and in addition, let's take a look at the overall S&P 500 really quickly to see what's going on, what we think, and kind of how the action that we're seeing in the S&P 500 right now, how this kind of ties back to something that we put on the board here when we crossed into, or even before going into the 400s actually. So way back here, back in the 400 area, right when we crossed this area, we talked about how 400 was interesting, and I drew this over here, paralleling it basically to what happened when we crossed 100, when the SPY crossed 100 for the first time, using that time frame and kind of the expected move of that time period, how that looks similar to what we were experiencing in the present, and kind of what we could expect kind of on the most bullish ends of things. So we're going to take a look at that. Let's quickly take a look at the Metromile trade that I'm in right now and see what's going on there, what I've been doing, any moves, any concerns. And basically, we could see with Metromile stock, we've been trading down. And so the big concern with Metromile stock at the moment is that we broke below the 20 period moving average right over here. So this is a critical thing to be paying attention to. One thing that I would say here is that basically in the overall markets in general, we had a pretty big sell-off on Friday, and a lot of moving averages have been broken. We even have the 20 period moving average broken here on the SPY at the moment here. However, a lot of this move to the downside was caused by a few different things. One, the lawsuit that's happening with Apple, the negative news there. Apple went down a lot, and when Apple goes down a lot, sometimes the stock market in general will sell off due to the weakness in the leadership over there, with certain stocks that kind of are weighted heavily in the indices. So another thing, though, is just also we had September 11th coming up the next day, on Saturday, in terms of when this day occurred on Friday, it was going to happen the next day. And it was the 20th anniversary. So there was additional selling happening just in terms of a little bit of a risk off type of move happening with investors, traders, and kind of the psychology that's happening around there. We don't really know what's going on, why traders are selling it could be for various reasons, but for one reason or the other, there was a risk off uh, appetite going on Friday, and I think we could expect basically a reversal coming on Monday. Now, is it going to be a permanent reversal, a temporary reversal? I think that we can see on Monday. I expect, and this is not financial advice; it's pure speculation. But I would expect to see, first of all, we could maybe see even lower prices at one point. It's possible, but I do think that we might regain or just test the 20 period moving average come Monday or Tuesday. I think that's actually a very likely scenario. And then we'll see if we can get above or if we get rejected at this important line over here. So we're going to see what happens there. We can see, let's go back to Metromile. So I think that that's going to be a similar trend of what we're going to see with Metromile stock. So I think in general, we had an overreaction. So I wouldn't be surprised come Monday that we get back above the 20 period moving average and even maybe start to see a move to the upside. And if we can get above the 20 period moving average, that would be pretty significant of potentially breaking this trend that we basically are, in this falling wedge a little bit here. So if we do break above the 20 period moving average, that would be a significant move and possibly a break to the upside. So we're going to pay attention to this. The one thing to keep an eye out for basically is if we get close to the 20 period moving average on Monday and are rejected and we can't get above that. So again, I'm saying that speculation is that we're going to be able to regain the 20 period moving average here, but if not, then we got to be looking out down below, and we'd expect to find support around this line here. I mean, probably I'd be very surprised if we actually go to this trend line, but that's something to pay attention to. Now let's take a look at Lemonade stock and what I'm doing there. But before that, with Metromile stock, I did add at $4.13 actually. Remember, I sold about 500 shares on the previous Friday. So I added back those 500 shares at $4.13 actually. So let's take a look quickly at Lemonade stock. So what I've been doing with Lemonade, actually the prior week, I sold a put for a $76 strike and that was with a I think $100 in premium. And actually, during the day on Friday, we were trading, over $76 actually. So I actually bought back my contract for a 70% gain. So I bought it back for 30 bucks, made $70, and then quickly turned around and sold the contract for the following week. So basically expiring on the 17th or the coming Friday. And I collected $105 in premium for a $73 strike. So I'm continuing to reduce my potential cost basis if I ever get assigned to buy the 100 shares of Lemonade. So I'm interested in buying Lemonade, but at the same time, in terms of the technical of this range that we're trading in between, it's kind of it looks like it's at a attractive value, but at the same time, we could retest the bottom of this trend and we could also go to the top of this trend. So I'm not really eager to necessarily just jump in all of a sudden to start a position here. But so that's why I'm starting to sell puts because I'm interested in buying shares and I will collect premium. So basically, I have my exposure to Lemonade. Basically, I'll be collecting premium if it continues to hold. And if it breaks down, then I will own shares. And I think this is a pretty good risk to reward on Lemonade stock. So that's what I'm doing with that. Let's take a look at the S&P 500 real quick. And we can see here with the S&P 500, again, I'm speculating, not financial advice, that we might retest this moving average as early as literally on Monday. But let's take a quick look at why I drew this months and months ago, back when we were just breaking 400 for the first time back here in April. And the reason for this is if we go all the way back and find when we broke 100 for the first time, actually. So if we go back to when we broke 100 for the first time, we can see we were right over here, actually. We had a similar gap that wasn't filled in the near term. And so we experienced a similar thing when we broke 400. So then that made me even more interested. And before we even broke 400, I was looking at this period, and you can look at the videos back then, and you'll see about me talking about this time period. But basically, I measured the timeline here, how many months it took us to peak here, and kind of what was basically the return in terms of the percentage return that we could expect and adjusting it slightly for basically, the differences between what we can kind of expect from this time period and if that might be a little bit different in the present. So I took these factors, I did some kind of number crunching a little bit, and basically I use that same time frame and time period to look at the present. And so again, back when we were in April, I drew this mark over here as a potential very bullish target basically. And I also, admitted that I don't think we're going to actually hit this target, but I want to leave it here and just have this as a reminder of basically what is possible, why to remain bullish. Something like this has happened in the past when we passed a significant number. And markets tend to not necessarily repeat, but they tend to rhyme when a similar event happened. And I noticed the similarities of when we crossed 100. And as we can see here, the similarities of this gap when we crossed 400. So that's something I wanted to keep in mind and leave here. And I left it here the whole time. And maybe you've seen this here when I open up the charts for the S&P 500 sometimes, and I probably don't even mention this, but this is interesting and an interesting thing to just be paying attention to. It doesn't look like we might hit this necessarily, but it is interesting that this is something that is possible and that could actually potentially happen and get to these prices, even though these seemed like astronomical, and it'd be surprising if we get anywhere near those prices back in April. And yet here we are today, actually not too far off. So that's pretty exciting. Well, I hope you guys got some value from this content. If you haven't already, smash the like button, subscribe to this channel for more content like this, and I'll catch you guys in the next one.